I'll give a quick 1 minute summary of what we did last time and what we spoke about last time. A little bit of background again for someone joining new for the first time today, I think, and missed the first session. I'm Madhav Bhaskar. I lead the investment team at Venture Catalyst. I'm principal at Venture Catalyst. And what we can do is, I think, probably, Ganesh, if you want to give a quick intro first, and then we
Yeah,
can.
probably I'll take over. So, Madhav has already said good morning, good afternoon, but I will say it again. Thanks everyone for joining us today for this session on investment organized jointly by ICAI, the Luxembourg chapter, and IBCL, which is the Indian Business Chamber of Luxembourg. I'm Ganesh, and I'm your host for the session. The ICAI Luxembourg chapter was established in 2020 for the benefit of the more than 100 chartered accountants who are working here in Luxembourg in leading companies across industries, including the Big Four and other leading auditing and accounting firms. As an active chapter, we act as a link to our parent body back in India and endeavor to provide a platform for constant learning and networking. IBCL is a non-profit organization, as you guys know, that aims to strengthen bilateral business relationships between India and Luxembourg. We'd also like to thank ICICI for continuing to support this event. Let me just remind, before I go ahead, let me remind you that this session is already being recorded. We will have a question and answer at the end, but please feel free to type in your questions into the chat at any time. Now, join me in welcoming Venture Catalysts who are conducting the session for us today. Venture Catalyst is a leading Category 1 angel fund offering diverse investment opportunities and trusted by over 3,600 investors. It has more than 300 iconic family offices associated with it. Their impressive portfolio includes support for over 360 founders, 54 companies with valuations exceeding $50 million. They have 3 unicorns, 35 sunicorns, and 100 minicons, and over 150 exits and rounds. So with a consolidated portfolio valuation of approximately $10 billion, Venture Catalyst is a driving force in the startup ecosystem. We're really happy to be associated with them over here. I'd like to also now hand over to Madhav Bhaskar, who's a principal and leading an investment team at Venture Catalyst, and he will share valuable insights and expertise with us today. So a warm welcome to you all. Over to you, Madhav. Thank you.
Thank you so much, Ganeshi, for the introduction. Good morning and good afternoon to everyone who's joined in from parts of Europe as well as from India. So yes, I think broadly, sir has given my introduction as well. A little bit about me. Technically, I'm an engineer by education, CFA, part of CFA done, as a lot of CAs might resonate with as well. Joined Goldman Sachs, worked there in structured commodities for 5 years, moved to VCATS. I've done around 80 fundraisers myself, raised close to 150 to 200 crores across those deals. Sit as an advisor to a lot of early stage startups who are at the stage of ideation, are at the whiteboard trying to solve good problems for India and across the world. So last session we typically touched a little bit about why India is an ecosystem and the nuances of startup investing. What typically might be the differences a typical equity investor might see as compared to startup investing. How we are looking to invest in the best of the next as compared to and the style of investing is slightly different, where especially at an early stage you might not have the kind of metrics and the kind of numbers already in place. So it's a lot more forward looking and it's a lot more based on getting the right assumptions and doing a feasibility analysis on the assumptions that the startup founders are envisioning, as well as our expertise and our experience over different sectors. We try to take good judgment calls at an early stage. Obviously, the kind of returns that we see are, we talk, most of the investors you must have spoken to in the VC ecosystem talks, I made a 50x, I made a 10x, I made a 5x, or the company shut down in a lot of cases also. We try to minimize the number of companies shutting down in our portfolio by providing active support also to a lot of startups when they're going through trouble times, and we'll talk about a few examples. But also the idea is that we want to get in early into startups where we see that maximum growth can be seen, some forward-looking trends, some young founders who are trying to solve different problems, like I said earlier, for India and the world. So today, I think, keeping that session one's context in mind and, hoping that most of the investors were there for that, we'll talk a little bit, at the risk of sounding slightly salesy, a little bit about venture catalysts. But, the idea is we're all enablers in the VC ecosystem, the startup ecosystem. And we're all trying to solve for various problems that a lot of startups face at an early stage. The idea with venture catalyst, like you can see on the screen itself, predominantly is we want to build an ecosystem rather than just having pumping in financial support to early stage startups. I think at an early stage, all the more a startup needs a lot more than just financial help. Of course, finances, money and funds flowing into the company are a big important part of the puzzle, but also they're not the only part of the puzzle, right? That is where VCATs and a lot of other investors come in. Through the angel fund, the idea is that we want a lot of the angels who are HNIs, ultra HNIs, family offices, institutions who have experience across the different sectors to come in and help with their connections if and where possible. We try to have these quarterly calls with founders where the founders really come and address their set of investors, talk a little bit about the kind of challenges that they're facing, the kind of good things that have been happening, and it's almost like a call to any investors who can actively play a role in one way or the other, not only by providing more capital but also help solve some of the challenges that the startup founders are facing at an early stage. So I think that is one very cool thing. As an ecosystem, again, the idea is that we want to help startups at various stages. So we don't want to just put in early capital and leave it at that and just be like, okay, the startup can go out and build things on their own. So to facilitate that, like you can see at the top of your screen, 9 unicorns, which is now called 100 unicorns, is an accelerator fund which comes in. It's like a VC fund, where there is obviously a general partner, just structurally a general partner on top, and they manage the capital that is committed by some LPs, limited partners, who commit to certain capital, and the GP decides where the money is going to go. So on an individual case by case basis, the investors do not have control over which startups they are going to be funding and which they're not. Broadly, the thesis is that 100 unicorns comes in at an accelerator stage, at a very early stage, predominantly putting in the first check of the company. We've got venture catalysts, of course, like you're aware, all angel investors, full control over which startups you want to put money into, which you don't want to. You can build your own thesis. We've got an investment team that helps you build your thesis, helps you across various stages of the life cycle of investing. We've got Beams, Elevate, and Spire. Spire is a little bit of a combination of early stage as well as growth stage, but it's a prop tech focused fund, still very, very early in its stages. I think they've not deployed their first check yet. But Beams is a fintech focused fund. It is a growth stage fund. They typically deploy around $10 million in fintech companies at a later stage. Their thesis is they want to invest in 12 companies across the fintech ecosystem. So not only payments, and today we are going to talk about a fintech startup, which is a very exciting proposition. And I'm absolutely in awe of the founders trying to solve a very, very interesting problem. We'll come to that in a little bit. But Beams typically is a fintech focused fund. 12 startups, slightly at a later stage. And typically, if you've heard of Neo, if you've heard of ProCap, if you've heard of CredGenix, these are some of their investments. If you can, after this session, get some time and probably check out those companies, you'll get an idea of the kind of stage that they're looking to invest at. Also, they've recently invested in all. Elevate, again, is a sector agnostic but growth stage focused fund. There is a good VC fund out of India called K Capital, KAE Capital. Their partner joined us and started Elevate Venture Partners. So I think the idea is that they want to invest in sector agnostic growth stage companies. They have made one investment. Naveen is their founder, the GP there, and he's got a phenomenal track record at K Capital. So the idea is that we kind of get this entire ecosystem together. We already have around 350 to 400 companies in the portfolio. A lot of cross pollination across different startups, various investors coming in and playing a key role actively on an ongoing basis. So those are things that we are looking to and trying to build. Recently, some of our portfolio companies have done a lot of collaborations like Leverage EDU. I don't know if a lot of you guys have heard the name, but Leverage EDU is again Series C funded startup building for overseas education. They've tied up with Zip Electric, which we'll talk about in a little bit as well. They've tied up with Oyo recently. They've tied up with a lot of companies. So, these are all portfolio companies that have found some sort of synergy in the kind of marketing exercises that they can do, or they can piggyback on the kind of connects that the other startup is built. Now, first, before we get into venture catalyst in detail, I think a lot of investors asked last time, why go through this angel fund route? Why can I not, just invest into startups on my own? And I don't know if I mentioned this earlier, but there's this very, very interesting line that one of the guys who came onto prominent investors who came onto other platforms said, and I might have mentioned this, but like Tendulkar needs a coach. We try to come in and we try to we might have not, as individuals from the investment team, not built out 2,000, 3,000 crore businesses, and some of our investors have done that, but they still rely on our expertise to live, eat, breathe startups. And that's where when you're investing through an angel fund, you're coming in collectively. And a very important thing about early stage investing is, one, building that relationship with the founders, and second, getting the right kind of rights in the company, right? Where you want to ensure that at a later stage, when bigger funds come, you have some say in your exit. You have all the kind of information flowing to you in the right way and form. In case the company goes south and there is some liquidation that is happening, you get the right kind of liquidation preferences in place. So those are things that would request anyone and everyone to go on mute, or if you want to take a question, happy to take that in the chat boxes. But broadly, I think the idea is that as a group, we want to get the best rights negotiated, and we understand that it's not every investor's day job to work only with startups. So that is where we come in. We negotiate the rights as a group, where all the investors on this group might be putting in 5 lakh, 10 lakh together, and that pool might become 2 crores. And then we are going and putting as an angel fund 2 crores into the company. So now we have that bargaining power, where we are able to negotiate rights for that entire group of investors who have put in 2 crores with the founders. So we are able to get better rights. We have more negotiating power that way. So definitely worth it coming through the angel fund. And then also some of the good deals. One very interesting thing, and that this is something that people have realized over a period of time: nobody wants a cluttered cap table. So you do not want 5, 10 lakh checks directly on your cap table, because the more number of people on the cap table, the more it is a little bit of a hassle for founders. And founders typically, and we've got some founders on the call as well today, the idea is to minimize the number of people on the cap table. One person who all these investors can come in as a group and trust their judgment, trust that they would negotiate the best rights for them, have one legal team negotiate everything, and collectively come up with the paperwork, instead of getting 25 different people to sign some document, 25 different approvals every time we want to make the smallest of decisions. So from a founder's perspective, it is definitely better that there are lesser number of people on the cap table. From a new incoming investor's perspective, a Sequoia, Axel coming in, some of the bigger funds coming in at a later stage, prefer, or rather in some cases it's even a deal breaker for them, which also indirectly makes the founders very cautious, that we do not want too many people with smaller checks on their cap table. So angel funds typically, as we initially used to call it, the democratization of startup investing started happening with angel funds, where even the best of the companies were not reluctant to have one entry on the cap table with 5, 10 lakh rupee checks coming in through an angel fund kind of setup. So kind of a win-win for not only the founder, not only one single individual investor, but also for the entire ecosystem. So that through an angel fund really helps. And next, wanted to touch a little bit upon venture catalyst as a group, right? So I think this one we touched upon last time. We've got 360 companies plus in our portfolio. We've done a lot of up rounds. We've done a lot of exits. We'll talk about a few case studies in a little bit. And we'll take a few questions also if time allows at the end. But we've executed over 500 deals. We've got a lot of investors, and the best part about a bigger community, see, I don't take a lot of pride in the number of deals that we've done, because it's about quality over quantity. So you want to do the number of deals basically points towards that there is something for everyone. There might be an investor who wants to do high risk investments, wants to come in at a very early idea stage kind of investment. We've got something for them. But we also have something for a slightly later stage investor who wants some proof of concept, who wants some basic traction already in place. and wants to come in at that stage. So typically something for everyone is something that gets captured in the number of deals that we've done. The idea is to not compromise on quality, and we'll come to how we, try our best to avoid to ensure that we get the best kind of quality. But number of investors is something that is very, very important on an angel platform, right? Because the more number of people, the more number of brains that have come from different industries. And a good example of this is today we are having this session with ICAI in Luxembourg. We had a session with ICAI in Abu Dhabi. We had a session with an IIT IIM alumni network in Dubai as well. We had a session with IIT Chennai, all the alumni of IIT Chennai, right from 80s or 90s, right up and until now, everybody attending, somewhere close to 250 people. So, some of them bring a lot of tech background. Some of the investors bring a lot of finance background. Some of them just bring great business experience overall. And the number of investors increasing really, really helps us, because for different startups, there are good investors of a variety of, skill sets coming in. And while a lot of investors just want to be financial investors, there's absolutely nothing wrong with that. A lot of investors want to play that additional mentor role. They raise their hand and say that, we want to work with the startups and create more value. We've done great in our careers, and this is our opportunity to not only put in some money, but also guide some young founders in the right direction from our experience. So that really helps. And this investor community becoming bigger and bigger has played a very important role for us. This gives a little bit of just confidence, right? Like, who are the guys, who are the brains behind what we're doing here? Dr. Apoorv Ranjan Sharma, I don't know, a lot of you might have seen him in person also. A lot of people call him the father of Indian startup investments. He's early backer of Oyo, early backer in BharatPe. Very good educational background. He's done a PhD in incubation management. Started some of the first incubators in the country. Has a very different style and thought process towards early stage investing, which is very, very founder friendly in a lot of cases. CA Anuj Golecha, again, he's a CA, so he's a numbers guy. And he's been 40 under 40 for various categories. And he's got a real estate business. He's got multiple businesses that have been going. I think Venture Catalyst is one of them. And along with that, our financial due diligence is done by Banshi Jain and Associates, which is headed by CA Anuj Gorecha as well. Then there is Mr. Anil Jain. He is again a real estate mogul, one of the most active, 40 most active angel investors in India. He makes it onto that list. Great backer of very early stage founders, great backer of early stage businesses, has a very strong business mindset. And Gaurav again brings that technical credibility. He's done an MBA from Stanford. And he's worked with multiple early stage startups, again, guiding them on the tech front and building their tech expert, helping them build their tech expertise. Our investors, obviously, people who understand the ecosystem, Mr. Ritesh Agarwal from Oyo, Mr. Radhakrishna Damani, some of the names that you must have, really heard and seen. Mr. Anil Singhvi, who I, just mentioned some time back, said that even Tendulkar needs a coach, was his quote. Mr. Aman Gupta, you must have seen him on Shark Tank. Mr. Kaman Agarwal from Haldiram Group, Nimesha, Mr. Nimesha from Inam Holdings. So these are, some of the names that have guided us, helped us over the period of time. We've got a great presence across different cities. We'll not get into the depth of this. We've spoken about the ecosystem. Idea is again to get in somewhere here. I don't know if you can see my mouse, but essentially at a pre-seed stage, guide the companies right up till unicorn. I want to, stop on this slide for a little bit, because a lot of people spoke about exits, up rounds. How do we go about exits? Now, one big myth was that, IPO is the only route for an exit. And we've seen a lot of cases where, the rightmost one you can see where we've seen some acquisitions, and acquisitions at great value in a very short period of time. In, typically 3 to 4 years is what we would say that, you need to hold on and wait for your startup investment to give the kind of returns it should give, right? Like in 1 year, that investment may not mature, and you might not get the right kind of returns that you are actually looking for from your startup investment. So you need to give it some time, and that is where your mergers, acquisitions start coming in after 2 years of the company existing. But a lot of cases, there might be some bigger funds who come in, and there might be a lot of up rounds that may be done, where in case of up rounds, it's not essentially 100% an exit, but on paper, the value of your money is increased. So now it's not like the stock market where you can just open Google or Moneycontrol and really just put in your investment in the name of your investment and see the price change on a daily basis in the trading hours. It is a little bit of a step. It's not a continuous curve. It is a little bit of a step-by-step kind of curve where the valuation of your company, in essence, you can gauge a little bit based on the business growth, but the actual valuation set will be decided only on the next round. So let's take an example here. Last time I spoke a little bit about Let's Try. It's a snacking company that we backed 1.5 years back. I'm a proud investor in the company as well. At a 10 crore valuation, we entered the company. Now the company's been growing. They were doing 2 crores in monthly sales. They've grown from there, breaching around 60, 70 crores in annual sales now. They were at 2 crores in annual sales, by the way, when we entered. Now they're at 60 to 70 crores in annual sales. So they've grown close to 30, 35x in terms of top line growth. They've maintained their bottom line throughout this journey. In the middle, they've done multiple rounds. So they did a round at 10 crore valuation, where we entered. Then they did another convertible round at 30, 40 crore valuation. Then they did another round at around 80 crore valuation. And then now they're looking to build a round at around 300 crore valuation. So within 1.5 years, that on paper, technically, it's somewhere close to a 25 to 30x return. Now, return is not the right word to use there because it's not an exit. Investors have not got their money back. But what happens is typically when a 300 crore round happens, either the investor who's coming in at the 300 crore valuation says that, I will put part of the money into the company and part at maybe 270 crores or 260, 250 crores to early investors, and I will give them an exit. So my ownership in the company will increase. The company does not need the kind of capital I'm talking about right now. So but I do want some ownership in the company. So I am going to do part primary and part secondary. So that is where the early investors can get an exit. Now we rolled out and we're planning to roll out an exit offer, and we've spoken to some of the early investors and if they want an exit, but the rate at which the company is growing, nobody wants an exit at this point because there is a clear roadmap to the company growing maybe around 2.5, 3x from here. But these are typical cases where, one investor coming in can give a primary plus secondary offer, or if there is a 300 crore round that is done, there might be some outside investors who might get interested and use that 300 crore valuation as the benchmark and give a secondary offer to early investors where the startup does not want to dilute further. And I am going a little faster here, but we will be putting my contact details in the chat box. So, if there are any questions, feel free to reach out to me or Arnima after this call, and happy to address them as well. But this is just one case, right? And then, like you can see Zip Electric over here. Now it says 14x technically on up rounds, but our growth has become a lot more. And this, I would touch upon Zip Electric as a case study where, it's a true sense of startup investing. Started off as a EV cycle company before COVID. Through COVID, realized that, all the office spaces and all the workspaces are shutting down. So a EV cycle model may or may not work through COVID, and there was a lot of uncertainty around what can be done there. But the orders on Zomato, the orders on Swiggy, the orders on online e-commerce and all were increasing because people could not step out. So they did a very strong pivot in their business with the guidance of some of their early investors. Dr. Apoor played a very important role. Some of the early investors played an important role. And the business shifted onto a last mile delivery aggregator platform and electrifying the last mile delivery. So anyone like a Zomato, Swiggy that had their fleets, they were told to, Zip got them and helped them make their last mile deliveries through EV fleets, which kind of reduces their operational costs, as well as made an aggregating platform where there was a lot of idle time for a guy who was only delivering Zomato. So now it became that, okay, when you don't have a Zomato order, you can maybe do a 1mg delivery as well, just through the same fleet. Again, Zip Select full model may not be clear because I'm just trying to summarize it within 30 seconds, but we can give a detailed summary on what Zip does later. But the essence of the point was that there was a very big pivot in the business. When we invested in the company at a $5 million valuation. They've done, I think, 3-4 rounds in the middle at a $25 million valuation, at a $140 million valuation. And the latest round that they've done is at a $270 million valuation, right? Now, if you look at that on paper, it is a tremendous growth. And this has been over the last 4 or 5 years, if I'm not wrong. And, one might say that, oh, the business was completely pivot. There was a complete pivot in the business. And that is the essence of startup investing. There will be a lot of cases where at an early stage, we and the other investors come in and we try to guide the startup founder. And if things aren't going right, we help them take an active decision to look at some of the, immediate next things that they can solve for. It may not need to be a complete 360-degree or 180-degree pivot, but it can be, some offset of what they were already building. And that is a very normal thing. It is a 3-4 year journey, and we need to be patient investors. Okay, so I think Zilpen, let's try very good examples of, the kind of exits that we can get, the kind of, and again, I don't mean to paint a very rosy picture here. All exits, all investments are not the same. They're not going to give 100x, 50x return in every single investment. The idea is that, we are investing at a risky point. There might be 1 or 2 startups that shut down. But the idea is that we want to invest in good startups, good businesses, help them grow, and then, I hope that the startup founders have the right kind of fundraising abilities and the execution capabilities to build the startup into, what we envision it today. Now, this is something that gives me a lot of confidence into, why VCAT stands out. While there are other players in the ecosystem that are doing a great job with a lot of good investments, facilitating a lot of angel investments, why does VCAT stand out? Why do, we say that, we are probably one of the best? I think one is the ecosystem. Second is the kind of deal flow that we get. In a month, the team looks at close to 500 to 600 deals, inbound and outbound combined. And these are the deals that come to us. They have a straight up filtration process where, if it does not check a few boxes, like the founder is doing maybe 3 businesses at one point of time, and those kind of things are major red flags that we do not want to invest in. And there are some themes that as VCATs we are against at this point. I mean, not against, but typically want to stay away from, where we see a lot of uncertainty in this space. Those are things we don't get into. Something like a crypto, for example, we've not invested in a long time. Gaming had some uncertainty. We invested, I think Router was our last investment in gaming. So, and then obviously we follow the Jain philosophy of investments. So anything non-veg related, anything leather related, we don't look at. So from 600 comes down to 400 through just these high level filtration. After that, the team starts going into deeper conversations, tries to understand the numbers, tries to understand the businesses, the vision, etc. Further comes down to close to 30 startups. Now, this is a big set of startups that have been rejected, where we feel that they're too early. And when we are idea stage investors, there's actually nothing called too early, but too early and the point, like, even in terms of the idea, if the founder does not have clarity on how he's or she's going to execute, that is still too early, even for an idea stage startup. Post that, what we do is we have our investor committee. It's an IC where it's an independent set of investors which come in. They are people who have 20, 30, 40 years of experience in a particular sector, who come in and help evaluate the feasibility. Now, we have to be humble here and say that, okay, Madhav looks at companies from a sector agnostic way. I have been in the ecosystem for a while. I've looked at 80 investments, but yet I cannot understand a particular sector in the kind of depth a market veteran can understand. I will understand it to a very great extent because that's my job. But if someone comes in with 40 years of experience and we both have a debate, I'm sure the person who's been in 40 years in, say, fintech or in consumer tech only might know some things that I may miss out on. So just being humble on that front, we get industry experts to help evaluate and see the feasibility of these startups, in case we are missing out on something. If there is one of those edge case scenarios that we've not factored in, but someone in the industry might know that, oh, this is something that may go wrong with this startup. So there's an independent committee that evaluates these startups. Post that is where I come in, my team comes in, we structure the round, ensure that we come in at the right kind of entry. We always say this: you could have the best apple, but instead of 30 rupees, if you're paying 3,000 rupees for the same very good apple, you may not buy that apple, right? So same things with startups, maybe not that vanilla in nature, but it has to be that the investor needs to come in at a point where they are going to get the right kind of exit, they are going to get the right kind of return that they're expecting, as well as the startup founder is not diluting too much so that they can raise future rounds. So balancing 3 or 4 fronts together is what my team's job is essentially, and also negotiating the best rights so that all investors are protected, founders are able to build the company in a sustainable way, again taking all the fronts together in tandem and trying to get the best deal for the investors. So this is a very, very important thing where I think VCAT stands out. We've done close to 48 deals. I don't want to go into detail, but this year we've done 48 deals, 25 deals since April. If you look at these, there are a lot of, so I think Florio, Berry Lush, Rio, these are some good consumer names that you can see. Blue Copa is a fintech. Almonds is again a SaaS, AI SaaS. Who Live is into co-living spaces. Um, Elephant is into toy subscription of sorts. Nayan is into dash cams and security, working on B2G. So, the whole point of this slide is that we have something for everyone. Anyone who's bullish on a particular sector will find something on the platform. So, when people take the membership fee and they say that, oh, 1 year I'm going to be looking at startup, what if you don't show me something? It is very, very close to impossible that, we show you absolutely nothing that is going to fit your thesis. We've built a drone ecosystem, we built an EV ecosystem, and we try to stay on top. Like the entire team visited GFF recently, tried to see that, maybe payments to a certain extent were solved for, but cross-border finance was not solved for, longevity finance was not solved for. These are themes that we want to stay on top of. And an investor who's got a day job may or may not be able to do the same kind of research, the same kind of, interaction with the ecosystem. So that is where the team plays an important role. Recent exits, obviously, we've given a 4.2x multiplier in customers. So these are hard exits where we've returned capital back to the investor. 3.5x in Insurance Samadhan, 2.18x in Coovers. We are looking to work on some exits around the 20-25x mark on Let's Try. We have returned capital in Add-on where we are, I think, we've returned back at somewhere close to 6x. So very, very good, interesting ecosystem. And how do we do this? I think we've got good partners. We like to stay humble. We like to have good partners. We like to build good IPs of our own. So, we've got the D-Day, we've got the ProStar, where we try to support the companies at different stages. And right now we're looking at sustainability, we are looking at clean energy, we're looking at responsible consumption, we're looking at climate impact, we're looking at zero hunger. So these are good themes that, we feel there is room to grow in. There is, there has to be some kind of focus when you're looking at it from an institutional perspective. I think we try to cover all the fronts where we feel there is room for growth and someone solving for good problems. I'm going to pause there. I think it was a very, very fast, concentrated set of information. Arnima has put in my details and her details in the chat box. I'm really sorry if this was a little fast for everyone, but I really wanted to leave time for the Dodo payment pitch, which I'm very excited for. Every time the founders pitch, I feel like it's a very, very interesting problem to solve cross-border payments. I think the founders are already with us. I think Rishabh is on.
Yep,
Rishabh,
hi.
hi,
Can you
hi,
hear
hi.
me?
Yes, yes. If you want to, share your screen and put the video on, that'd be really great.
Wait, can you see me?
Yes, yes.
Amazing.
You can see you.
Let me share. Can we just go to the screen share then?
Yes. You have access to screen share?
Yes, I do.
Perfect. So I think Rishabh, your screen is up. Investors, we've got Rishabh. He's the founder of Dodo Payments, a very interesting proposition. We'll come back to why VCATS is looking at Dodo Payments and what is our view on it. But first, I'll pass it over to Rishabh to quickly take us through the presentation. And we'll take up some questions at the end. I know there were a few in the chat box, if I'm not wrong. But we will be having a separate session on Angel School where, if you want to know more, we can take that separately. Over to you, Rishabh. Yeah.
Hey, hello everyone, and thank you, Madhav, and the VCAT community. It's a pleasure always to interact with you folks. Very happy to be present here. I'll talk a bit about Dodo payments, the problem we're solving, how we're going about it. Fundamentally, our belief and thesis is that digital businesses, like SaaS businesses, are default global. That is, your customers are all over the world, and you should be able to effectively monetize. But today you are on and to monetize this audience, you want to offer local payment methods, local payment solutions. But today, as a company, you're only limited to payment gateways in the country where you have an entity. Okay, so you're limited in terms of your payment solutions. And to solve for this, Dodo Payments is essentially simplifying and abstracting this massive opportunity. First, I'll talk a bit more about founders. So I'm, of course, Rishabh. Ayush is my co-founder. So I went to BITS, then I went to London Business School. spent some time in UK. Didn't get the opportunity to travel to Luxembourg, but I've been up and around in EU. There I joined Wise, TransferWise back in the day, joined their London office, was the first non-Western hire in the business team, and primarily like product marketing product marketing and product management for the remittance channels from US, UK, Europe to India, and then joined another cross-border fintech company called Prodigy Finance, which is a UK-based company helping students from all over the world study at top universities across the world. I there was leading growth in emerging markets for 40 plus countries across 6 continents. First set up a team in India and then eventually across 6 time zones from Korea to Brazil, and then work with a bunch of other companies like Solitex, Bazaar, where I get a bunch of different roles. And at Bazaar, which is my most recent stint, I was helping Indian brands and factories sell in the West through our entity, which was based in the US, California, to be precise. And I had built the BNPL product for cross-border B2B e-commerce. And the payments from US customers was very smooth, but non-US was very challenging. So I was very perplexed. My initial hypothesis was maybe we understand how to assess credit for US customers and not for Canada, UK, Germany, etc. But turns out it's just that Stripe payment gateway that we're using is optimized for domestic transactions, or in fact, all payment gateways are optimized for domestic transactions and not for international transactions. And I'll explain in the problem statement later on. But that's really when it sparked an opportunity in my mind, and been at it since September last year. Met Ayush in January of this year. He's an IIT Roorkee CS grad, has exited a VC-backed business before, which was in gaming. And he's worked in a bunch of early stage companies leading tech and product functions at PowerPlay, IndiGG, Tunafest, Pharmaco, etc. And I think the one place that we resonated was even for Ayush, right? He's building a gaming product. It is a global product by default. He did build a global payment stack, but suffered a lot of setbacks and struggled with a lot of challenges. How do you optimize payments for international customers? How do you manage sales tax, other compliances, statutory filings? So Ayush actually shut down his international audience, which is more than 40% of his customer base. And when India imposed a lot of restrictions on gaming, he eventually had to, figure out an exit opportunity rather than scaling his business. So we both really resonated on the problem. It's a problem that we both lived through, and we have spent a lot of time building and scaling global businesses. So in terms of the opportunity, right? So we are very clear, we are focused on micro SaaS and SaaS, though there are lots of categories out there that seem very exciting. You have travel. So for example, Airbnb, has hosts from all over the world and people from all over the world going and spending on that. You have social, you have tech, you have media, you have content. But for us, micro SaaS and SaaS is a key focus. There are primarily 3 reasons. And that those 3 reasons came in by doing a lot of user conversations. Actually, this number has grown up from the last time we had. We have done more than 400 user conversations now, and more than 200 businesses have applied for early access. We're yet to launch. And the key learning there was that when you are building an global payment solutions, you want to first optimize for certain geographies. And in micro SaaS and SaaS, 90% of spend happens in US, UK, Europe, and India. So the first version of the product optimizes for these 4 regions, and it works well. Secondly, with AI, a lot of new companies are coming up. So there is no friction or switching costs for them to adopt a new payment product. And thirdly, our big value prop is also on the tax compliance that saw huge resonance. But I'll talk more about the problem first. So the first problem is that today, if you're doing any international transaction as a customer, the default status quo is a USD transaction via Visa MasterCard. Okay, now that fundamentally is not optimum for both merchants and customers. You have high failure rates and you have additional fees on top of your FX charges. So a Stripe would charge 2.5% to the merchant for international transactions, and your credit card company is going to charge anywhere from 2 to 4% surcharge depending on your, the type of card you own. But I think the greater story here is that globally people are moving away from Visa, MasterCard to local payment methods. And this is not just an emerging market story with UPI in India, PIX in Brazil, etc. But even EU, for example, recently launched Viro, which is their response of UPI. It works just like UPI, and it has really grown with strong traction in the past 3 months since it's launched. And when we start doing these user interviews, right, what our learning was that merchants, especially SaaS merchants, are losing a good chunk of high intent users at the checkout stage because of lack of localization, be it localization in payment methods, be it in currency, or be it in pricing, language, etc. The second problem that was very interesting for us to dig and understand is that of sales tax compliance. So you as a merchant are based in one country, your customers can be from all over the world, and now sales tax, which is indirect taxation, is defined as per your customer's jurisdiction, because in your home country it is now an export. For you as a SaaS company, you by default have customers in like 20 countries in the first 3 months of launching. Figuring out this indirect tax, doing the calculations, bookkeeping, remittance becomes extremely challenging. Okay. In fact, the cost of non-compliance is high, and the cost of compliance is high, and the cost of non-compliance is even higher. On the right, you see a screenshot where this guy has a $50 revenue per month, but still got hit by a $3,000 penalty because it did not comply with sales tax in certain jurisdictions. So this is something again we resolve for our customers. And the third problem is when you're a new company and you're launching, it takes a lot of time to get going and collect payments. You first need to set up an entity, bank account. You need to go create a PG integration, say a Razorpay. Typically, SaaS companies will have three PGs, one in US, one in India, one in Singapore. Then you need an orchestrator on top of it to show the right payment gateway, depending on where your customer is located. Now, the other thing is you need to tell your payment gateway what's the right amount to collect. So, which means a billing solution like ChargeBee, Metronome, a CAC solution, invoicing solution. And as you start getting customers, you need to solve for churn, fraud. So, a lot of different tools come up. They require periodic maintenance, cost a lot, and are a significant distraction for the tech team. Okay, so what we do at Toro Payments is that we just say, okay, look, instead of you sketching together so many tools and breaking your head, making sure all of them work smoothly, just come to us. We have one single SDK. Integrate that. It takes less than 60 minutes to get going. And we offer 300 plus local payment methods, and your sales tax compliance is fully automated. Okay. And the question is, how do we do it? So it's a twofold solution. On the top, you'll see a payment OS. So all the features required to ensure your payments are smooth. So checkout, billing, compliance, FinOps, they're all inbuilt with us, and you can access it within 60 minutes with our SDK. And then on the flip side is a model called merchant of record. So what a merchant of record means is you want to access payment gateways, but you can't till you have a local entity slash KYC in that jurisdiction. So what we do is in each major market, we set up our own entity. Say in US, UK, Europe, India, these entities go partner with local payment gateways. And then when we power your checkout and we see where the customer comes from, we resell the product on your behalf, and then the transaction is routed between the customer and our entity in that jurisdiction. So what it means is no matter where your customer are, your transactions are always domestic. Okay, so that's the beauty of this model. And yeah, we have strong traction. As I mentioned, we have talked to so many users across the globe from over 30 plus countries, translating into over 30 million in payments that we will process in every year. We have a 5% platform fee, and effectively we have a ARR before launch of more than 1.5 million. And I think the key question that Venture Catalyst asked us was why now? Why not 5 years ago or 5 years down the line? I think the story on international transactions growing faster was very obvious. So was the AI tailwinds. The one thing that built a lot of conviction for all of us was the fact that countries are increasing strict about cross-border sales tax compliance. So, for example, EU now mandates all payment gateways in the world who are operating or collecting money from EU citizens to reveal information on how much money was collected, of which how much sales tax was or VAT was collected from EU citizens on a merchant level, and then they cross-check with merchants if they have remitted that same amount or not. And if you're not doing it, you are getting imposed with a lot of fines, which is again a huge problem for any SaaS company, and we're solving that in an era where AI is really driving international transactions, and we're just selling picks and shovels for this new trend in SaaS space. In terms of competition, I think what I would like to remind here is merchant of record is a very well understood concept. It was in a different context, which is cross-border e-commerce. It's called importer of record. The largest e-commerce platform, the largest merchant of record platforms out there are Apple App Store, Google Play Store. But if you look at MOAs in the space of SaaS and micro SaaS, do you have Paggle and Lemon Squeezy? So Lemon Squeezy is solving for US merchants selling in the US. Paggle is solving for US merchants selling in US, UK, Europe. But neither of them have focus on emerging markets. Their onboarding and payout of money for customers outside of these US, UK, and Europe is very broken, very expensive. They also don't have any focus on micro SaaS. Micro SaaS founders have very specific needs, such as go live quickly, etc., which they're not offering at the moment. And we don't really look at payment gateways as a competition. They are our partners. They don't solve for sales tax. They have optimized for payment methods in certain geographies wherever they have licenses in place. And then I think the other big question that we really wanted to make sure we understand well is what is our moat? How can we scale and deliver an outsized outcome? I think the key point is that while we call ourselves Toro Payments, and the job to be done is optimizing payments, on day zero, anything that we do, a license activity is done through a partner. So we don't need a license right now. But going forward, as we scale, we will be acquiring key strategic licenses that gives us greater control over the money movement. And of course, it's a payments product, it's a trust product. So building strong merchant trust will be extremely critical. Any business decision we take will over-index on merchant trust. So yeah, I think that was pretty much my presentation. We are currently in the middle of building a product. And by Q1 of 2025, we should be doing a public launch. We are already scheduled for a beta launch in November. And our goal is to reach 5 million in monthly payments by June of next year. And we are pretty much on track for that. Thank you so much. Any questions, please feel free to drop in the chat box and I'll be happy to address them.
I think, Rishabh, one which has already come up, we can take, how do you handle local taxes? Each product category will have a different rate in most countries in case of VAT, etc. You have complications in input and output tax. Isn't that a big risk, and how do you address it?
Yeah, so that's a great question. In fact, if you talk about cross-border, the biggest sector is cross-border e-commerce, which is a $1.3 trillion opportunity. But we've stayed away from that because each product has different types of tax slabs applicable. But in SaaS, all products most likely fit the same tax slab. For example, in India, all SaaS products come in the 18% GST. This is true for all major jurisdictions that we have gone and studied. So there is no challenge as such in terms of understanding what tax is applicable where. Second is the question on how do you manage taxation, etc. That is the core of our business. Okay. In fact, we are one of the few companies that hired a lawyer. The first hire we make was a legal person, and the second key hire we hired was a finance person who has managed finance compliance tax across different jurisdictions. So again, we have the muscle internally to solve for this.
Got it. Any investors who want to ask questions, I think you can put it in the chat box and we'll take them. Preferably, if you can just rename yourself, it's better. And we will be running a poll as well. I think there is one more question that has come around valuation. I would like to take that question up as well. But Rishabh, if you want to talk a little bit about how you've gone about the valuation, you can also. What was your initial basis behind asking for this valuation? But we'll talk a little bit about this from a VCAT's perspective also, as an investor, how we've looked at the valuation.
So for us, actually, we had a good price discovery. We were lucky that there were multiple institutional funds who were interested in investing in Dodo Payments. And yeah, we got signals from multiple sources, or rather multiple investors, that the final valuation that we agreed on is what everybody feels comfortable. So that is how we arrived at the pricing.
Right. And could you talk a little bit about, so I'll come to the valuation part from a VCAS perspective in a short bit again, but could you talk a little bit about the kind of value add some of these smaller businesses would typically see from a price point perspective? They go get all these individual solutions as compared to getting a one-stop shop solution like Dodo Payments onboarded onto their business?
Correct. So basically, if you are like a young SaaS company, payment gateway is not the start and end of your payments journey. Say you integrate Razorpay, now you need to tell Razorpay what is the right amount to collect. So you need a billing solution. Then your most likely SaaS is run as a subscription. So you need a subscription solution that can either store your card details and tokenize them, or can generate an UPI auto mandate and manage that for you. So again, that's a different tool. You need a tool to create an invoice and submit that. That again is a separate tool. You need a tool, especially if it's cross-border payments, that manages payouts across countries. That again is an expense. You need a tool that manages in tax what is the right collection to do. So that again is an expense. All of these expenses add up. And even for a company, say an Indian founder incorporates in the US and is serving US customers, our understanding talking to Series B founders is that the cost goes beyond 6%. And since we are doing this at volume at scale, we are able to deliver at 5%. So that's part A. The second part, of course, is a pure hassle. And this is explaining two parts. First is about the fact that you have to manage tax compliance in each jurisdiction. So any Series C, Series D company anyway does it in-house. You would have a tax and finance team and a compliance team, which license with tax experts and attorneys in different key jurisdictions, understands what the right, have you crossed the nexus, which is the limit beyond which you have to pay. Like in GST in India, it's 20 lakhs for services, 40 for goods. Once that is breached, you need to create a tax ID and you need to do regular monthly or quarterly filings. So that is a big pain and headache for the founders and the key management team. The second part, of course, is on the tech side. Okay, now for a tech team, they need to make sure all these different tools that you've integrated, okay, are they working well together? Is the data reconciling? Is the Zoho books reflecting properly? And anything breaks, it becomes a P0 for any CTO, that, oh, my product is working well, but I can't collect money. I need to fix this. So again, that gets abstracted out.
Got it. And am I audible?
Yes, I can hear you.
Yeah. And also, could you talk a little bit about, don't you have transfer pricing issues, since you mentioned that you sell yourself in foreign countries and then sell locally as well?
No, so we don't have transfer, like, to explain transfer pricing. Transfer pricing is a concept when money flows from a subsidiary and a holding company. Okay, that is when transfer pricing comes in. We don't have any such transaction. Our transactions are not between a holding and subsidiary. So that is not a challenge here.
Got it. We'll keep the questions to Dodo Payments coming in, but I think There are a couple of questions just at a fundamental.
Madhav, I think there is a question for you as well on the chat box.
Yes, yeah, I was just going to address that. I think just at a very fundamental level, there's a question around, when you pool the funding from different investors into one big pot, then the investors do not have the voice on where the funds need to be channeled to. No, sir, the understanding here is slightly, different. So last time we pitched one company, I think it was RoadGrid, and this time it's Dodo Payments. You as an investor, once you get onto the platform, our job is to shortlist these companies and show you these kind of companies, these kind of early stage startups. You then decide whether you want to put in money into a Dodo Payment or you want to put in money into a RoadGrid. For each and every investment that we open onto the platform, there is a separate pool that is created. It's called a sub scheme that we open specifically for that investment. And all investors who want to invest only in that company, their money will go into that company only. It is not that your money is taken earlier from you and then it is distributed across different startups by a fund manager. So that's not the case. I think that there were two people who asked this question. And while I'm talking again, I think we'll talk a little bit about valuation also. I think there's a question around problem with the valuations. I think at a very fundamental level, see, Dodo Payments is at a stage where it's very, very early traction, very, 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 very early investments. It becomes more art than science. It's a very cliche thing to say, but it is more art than science. There is a lot of price discovery that needs to be done, like Rishabh mentioned, in terms of some of the other guys who are raising money in the ecosystem. But from as an angel fund, as an institution, how we value such early stage companies with limited traction, where we can't give a multiple on the revenue today, where the valuation would become too less and there would be too much dilution in the company. So it is a factor of multiple things. So the kind of team that is building this, at the risk of again praising Rishabh and team in front of them themselves, I think they bring excellent amount of experience of cross-border finance, cross-border e-commerce and payments, of the fintech ecosystem. They come from good educational institutes where they have a good alumni network where future fundraisers become easy. That is one angle to look at it, where the founding team is very strong. And we had just as an extreme example, just to demonstrate the point. I don't know if all the investors here have seen Shark Tank India. Season 1 had one of the sharks called Mr. Ashneer Grover, who was the founder of BharatPe, came up with a new startup. And when he launched his second startup, the valuation of the company in a pre-revenue, pre-product stage was somewhere close to $20 million, if I'm not wrong. And at that point, one wonders how have you derived at this $20 million valuation? Like I said, there can be justification for a 20 million valuation there also, as well as a 5 million valuation, as well as a 200 million valuation. It has to be a function of what are other investors along with us willing to pay, number one. What is the kind of upside potential that this startup has? If you go and see some of the giants that have been built in this space, if you look at Stripe, a $50 billion company based out of US, you can see Lemon Squeezy again, which got acquired by Stripe, I think, again, which is very, very highly a multi-billion dollar company in itself. So, we've seen good fintech solutions in cross-border payments reach great heights over a period of time. And through that journey, there will be multiple fundraise rounds that will be required there'll be multiple fundraisers that will be required in the immediate future. I think 1.5 years down the line, there will be another round that Dodo Payment would likely look to raise. I think, Rishabh, if you could talk a little bit about your future vision in terms of where and how you plan to raise rounds, how you plan to grow this company out, I think that would kind of help demonstrate this as well. But we have to leave room for bigger investors to come in. We have to leave room for founders to have some sort of equity left in the company. We have to see for dilution today. We have to see the kind of upside potential. We have to value in the kind of problem that we're solving, how big the problem is. Had this been a consumer company with, like I gave an example of Let's Try, relatively easier to value consumer companies because you can't expect very, very disproportionate growth out of the blue once the tech solution is solved for. And over here, it becomes more of, once the product is ready, there is going to be a lot of inbound interest also, which we are expecting. And we see that the company can scale really fast. So I think broadly, there are multiple angles that we need to look at, and valuing early stage companies is the trickiest, right? We do look for a lot of comparables. We look for a lot of later stage companies and how they have looked like on as a multiple of their revenue, of their AUM, of their transaction value, etc. So that's what kind of helps us see what the company is going to look like 5, 10, 15 years down the line. Maybe not 10, 15, that is very, very, in very, very much into the future, but typically 5, 7 years down the line, how the company is going to look when it has actual revenues. And then try to see that, what kind of returns we'll be getting if we come in today. So that's, I mean, hope that broadly answers, but again, my contact details are there in the chat box. Happy to take this up offline as well in detail. But Rishabh, if you could talk a little bit about, what is your expected revenue, gross transaction value, path to profitability in the long run? I think that will help provide a little bit of context as well to answer this.
Sure, yeah, of course, Madhav, happy to chat on it. I think first I'll give or rather add to your context, right? As a fintech company, there's a significant upfront investment building into the tech side of things. And given that we are not acquiring licenses on Gay0, we need to build a lot of partnerships to deliver the same outcome that we want to give. So we are taking 6 months to build the product. The product actually gets built in 4 months, so around November. We are taking another 2 months to just do beta testing and make sure everything's smooth, working properly. We have good volumes already on our platform through pre-sales. We are on track to hit 5 million monthly payments processed by June of next year. We have a 20% margin, which is very high for a payment product. Okay, payment products tend to be high volume, low margin, but given that we solve for CACs, compliance, KEC, etc., we're able to command that margin. And this would be a very good amount to go raise our next round. After that, the next round we anticipate is somewhere end of 2026. And the objective would be to reach certain scale that commands, or rather that is able to get interest from various financial authorities or regulatory authorities across the world to get key licenses, so that we don't need to rely on our partners and we gain control over our own payments into our company and outside, or rather shipping from the company to our merchants. So that's how we see the next 2 years play out.
Got it. Deepak sir, I hope that kind of answers your question. So the question again for VCATS is, what is the minimum investment size expected from an investor? So this is INR terms, it is 5 lakh rupees. I should have done the conversion into whatever the local currency, I think euros and all, before this, but 5 lakh Indian rupees is what you can look to invest minimum. Okay.
Madhav, we are running up the poll, so I think interested people can participate on.
Yes, so there will be a poll that will come up on your screen. I think if you can just, answer with a yes or no. But the problem here is going to be that, most of the investors are, if we request you to rename yourself before you answer the poll so that we get the right name, so we have to reach out to. But if you can just demonstrate your interest there, that would be really, really helpful. Also, in the meanwhile, while you're answering the poll and taking a call on this, I think one of the other questions said also, if you have a platform with open investment pool, how can we get access? Or is it a case-to-case, mostly offline? So I think if I've understood the question correctly, how do you get access to all the deals that are open on the platform? Generally there is an initial onboarding fees that we charge, which is a subscription to get access to all the deals. But as an exception, because Anjani ji has been very kind to us and helped us connect with you guys, as an exception, what we're doing is Arnima will be sharing the list of all the deals that are open and a one-pager on all the deals. If you find anything interesting, we will share further details on that specific deal. And when you're looking to invest, obviously you will have to get onboarded as a member onto the Venture Catalyst platform. So I think Arnima will be sharing all the details. Anjani ji, if you can just share all the open deals that Arnima shares with this group, I think that would be really helpful. And just for Dodo Payments, for in interest of all investors here, I think we'll be sharing a one-page note also what we've spoken about today, as well as the pitch deck and other details that the team has prepared, an investment note as well. But typically, we are very close to being oversubscribed on the deal. And we're looking to close out this specific investment within the next 4 to 5 days. I know, first apologies for the short timeline, but we'll be sharing our contact details also on the chat box again. If you have any further questions, happy to take that up. The investment team will reach out to you, or we can set up a call internally and we can address those questions. But we out of the entire committed bite that we had, and unfortunately or fortunately rather, for the startup, we catch we get only a small part of the bite in this first round, and that bite is I think around 85% subscribed already. So would love for you guys to reach out to us ASAP and let us know. Da-da-da-da-da. I think the poll is on the screen. I think if there are no more questions for now, broadly, thank you so much, Rishabh, for that wonderful presentation. I think it's an excellent problem to solve for from a VCAT's perspective. Again, we looked at this stage, we were actively looking out for startups that were solving for cross-border payments. We have invested in some cross-border e-commerce accelerator platforms and cross-border businesses in the past. We've seen great results and outcomes from them. We have invested in some fintech platforms that are solving for parts of the solution. Did an extensive business due diligence, reaching out to some of those founders and the need for a solution like this, and what their experience has been with some of the smaller businesses that they do not cater to as well, and got some exceptional response, not only from some of the SMEs who would like a product like this. I mean, the ARR before getting the product even out there speaks for itself, which was mentioned in Rishabh's presentation. But even from our business due diligence found that there is definitely a need for a cross-border payments platform, one-stop shop solution like Dodo Payments, and there is no single name that exists over there that is big enough, or that is solving for all these problems under one umbrella in the way that Rishabh and Ayush plan to solve. So that is where we decided that we have to go after this. There were obviously multiple rounds of discussion with the team, and they had multiple rounds of discussion, 9 unicorns as well. And so finally we decided to go ahead with the investment. And so yeah, I think if there are any questions after this, we will get back. Our details have been put in the chat box again. Hopefully we've answered all the questions, and it was a great 1 hour well spent here.
One question which is still there is on the chat related to the lock-in period. If you can just quickly touch base on that one.
Lock-in period, I can't find the question, but broadly, lock-in period for your investment through the angel fund is 1 year. We want to have one additional session also on angel tax and different types of the tax implication of an investment through an angel fund. We have CA Ishank Shah, who's the head of Banshi Jain & Associates, who helps with our financial due diligence as well. He will take a separate session. It's a very technical session, so we wanted it to be separate and wanted this one to be slightly lighter. But yeah, predominantly 1 year from the time of your investment, there is a lock-in period.
Good. I think we've run out of time. We've really run way ahead of time. So thank you very much, everyone. I'll start off with thanking Rishabh and wishing him the very best with Dodo Payments. One question I had, which we can probably take offline, is why the name Dodo Payments. Very, very interesting, but we'll come to that separately. But thank you so much, Rishabh, and good luck to you. A big thank to Madhav again for conducting the whole session and answering all of the questions patiently. Thank you very much. A big thank you again to Arnima for running the whole thing behind the scenes. Thank you so much for that. And again, I would like to close with thanking IBCL, who have been our partners, and all of their members who have joined, and then ICICI for supporting us. And then a big thanks to everyone who has joined. I hope this session was as informative as the previous one, and you get a lot of value out of this. So hoping to see you guys again during our next session. Thank you so much, everyone.
Thank you.
Thank you so much for having me. Also, as Madhav said, we not only have VCAC, we also have 9unicorn/100 unicorn with us. So we're very happy working with the whole team. It's just been a very supportive journey. And yeah, always a pleasure to be here. Happy to talk to any of you offline if needed.
Thank you.
Madhav, Arnima, thank you so much, and the
Thank
whole
you so
VCATS
much,
team who
everyone.
has
It's
been
been a
behind
great
this
day.
one. So thank you for arranging this session for Luxembourg. We'll be in touch.
Absolute pleasure. So look forward to meeting you in person soon.
Very much. Yeah.
Thank
Thank you.
you.
Take care. Take care. Thank you, and have a lovely weekend, guys. You know, the sun is shining in
Thank you.
Luxembourg, so
Very
very
soon.
nice. Thank you.